I know a lot of you probably joined us a couple weeks ago when we talked about a market and our new buy box and what we were looking for, and we brought up Middle Georgia. And the coolest thing and why I'm so excited today is we now get to introduce the property that was leading us out there. So as you know, we own a property called Arden Place in Warner Robins, Georgia. Get those right. And we now have fully under contract a property called Holiday Cove in Forsyth, Georgia. And so we're going to present that property to you today. There's a couple things that are going to be very exciting about it. Is not only do we already own something in that area, we're also looking at some other properties there. But we are actually doing this offering a little bit different than we've done in the past, which is going to be really, really neat for some of you that haven't been able to jump in one of our previous investments. And so we're really excited. This has been a little time in the making on this property. It took us a little bit because we always negotiate the best deal we can. And we always go back with our attorneys to try and make it an even better deal as we're going from LOI to PSA. And so we are, as I mentioned earlier, now under contract on Holiday Cove. It's a 96 unit building in a B market called Forsyth, Georgia. A really small market. Is those of you that were on the market call with me a couple of weeks ago, remember it's one building out there in the whole county of Monroe County, and there's only 357 units in that whole county right now, and we're about to take over 29% of them. And so it's a constrained market, and there's a lot of reasons why we like this that Tyler and I will get into on this call. So welcome on the call. I hope you guys find Holiday Cove as awesome as we do, and if you have the ability and the desire to invest in this property with us and going on along the journey, then we're going to show you a link at the end of the call that will allow you to get in and come along the ride with us. I want to introduce also on the call, just so you know, with this here, Tyler will be the main general partner on the deal here. Tyler will be it with MF Capital Partners. And then myself and a few other people will be on with him here. We have a couple other GPs, Hannah and Grace, and you're going to hear all about them, and you're going to see them in the investor deck. They are a couple wonderful ladies here from Orlando, Florida also, that are big real estate gurus on the residential side at first and have now transitioned into the commercial state. And so we're excited for them. And then also Steve Lannon and his partner Brandon, that we're going to discuss being part of this deal also. And so let's kick it off here, Tyler. Tell me first we and you got to tour the property a little over a week ago. We actually physically walked it. Tell me your first impressions when you physically saw Holiday Cove, man.
Yeah, it's a good looking property, man, and a good looking area. So good to see everybody on here, by the way. Thanks for taking the time on, Monday night to be with us, or Monday, whatever time it is where you're at. But I'll be honest with you, the first time that they had sent me this deal, Eric had sent me this deal, because shout out to Eric and Lindsay, man. They've been working hard on sourcing lots of deals. And I'll tell you that we've been underwriting, well, man, a lot of deals. And I've been shutting down a lot of deals. So a lot of deals, man. We want to make sure in the environment that we're in, that we're buying, which, by the way, the environment that we're in can be a beautiful thing if it's the right target. And so huge shout out to Lindsay and Eric. They've been pumping through so many opportunities to find the correct one. And it's interesting how things progress, because when they first sent this to me, I was like, okay, where's Forsyth? I had never heard of Forsyth.
Yeah, right.
And so but then that's what's beautiful about knowing what to look for. And so Forsyth, meaning our targets. So Forsyth is 20 minutes north of Macon, but it's also 50 minutes north or south, of Atlanta. Well positioned. And it is, I'm really, really, really liking the Middle Georgia market the more that we dive into this. And definitely Arden Place is killing it right now. So that is beautiful. So, man, you asked me, though, back to the question, you asked me what I thought about it. I was excited to go get eyes on it. It's another thing that I'm in Orlando right now. I moved to Orlando in January, and man, it's been awesome to be here, local, and then be able to go lay eyes on it. And man, beautiful area. I also noticed that there's a Chick-fil-A like literally on the same street that's coming in. And listen, that's always a good sign. And plus, I love Chick-fil-A, so now it will entice me to go visit the property more.
Yeah.
So
Hopefully in that
yeah,
drive-through line that you wait for about 45 minutes, right? They'll be staring at the Holiday Cove sign. That's
yeah,
what,
that's it.
right? We'll put up a big light that guides them into Holiday Cove from Chick-fil-A. So yeah, I was on, a couple weeks ago with them, Tyler. I know you were out speaking that weekend and couldn't join, but we went over the market a lot and how we're trying to hit that center Georgia, middle Georgia, whatever you want to call it. And so we've gotten some new projections on the area, even updated just very recently since that market call. And it's talking a lot about, the trends of the population, the trends of the job growth. Do you want to speak a little bit about that as we get more into the property itself?
Yeah, so like where we buy, I want you to understand kind of our targets because we're very specific on what we do and why we do it. We have a very specific buy box, especially once again right now. So we look at year over year job growth and just we're looking at a number of metrics, but even that metric, year over year job growth, Forsyth has seen a job market increase of 1.5% over the past year. And then we also need, future job growth, what's coming down the pipeline. And it's projected over the next 10 years to increase by 39.5%, which is higher than the US average. And once again, it's kind of this, I really like, we want to buy where people are, but we also want to buy where people are going. And I really like how it's well positioned in the middle. We look at household formations and population trends. What we look at, our target, just so you know, is we look at like positive population growth in the past and then positive future population growth. And in the past 5 years, it's been 7.1% growth. And then currently this year is 1%, or the past 12 months, it's been 1%. And then over the next 5 years, it's projected to be 4.1%. So all these things are like hitting the targets. This is what was so fun when they send it to me. And this is before I even look at the property level, right? I'm looking at and I was a little bit familiar with obviously middle Georgia because we already have a property there, but not in this exact same metro. And so another big one is just job diversity. And what I've learned more and more is we want job growth. We also want job diversity because, man, it mitigates risk. One of your biggest risks is people not coming to the market, people not being able to pay their rent. And, those are jobs. Jobs bring people and pay them money so they can pay their rent. And there's no industry in this area that controls more than 20. Our target is 20%. We don't want any industry that controls more than 20%. And in Forsyth and really the surrounding areas, there's no industry that controls more than 17.3%. So all these things start coming into play. I talk about job growth. They've had 4% unemployment over the last 12 months. They have a big new shopping center that's bringing in a bunch of jobs, over 1,000 jobs. And they have in Monroe County, they have Jack Links that are expanding there, Coca-Cola, Frito. So it's like all those things are beautiful as far as what we look at a market level.
Do you know what I've
For
looked
us to
so
come
far,
in.
Tyler, if I can interrupt for a minute, is like we're going to obviously get into the property tour and what we saw, but you're not coming on here going, you know what I loved, Eric? The building was really nice and the interiors had this. And it reminds me of one of my favorite sayings I've had Tyler teach me over the years is fall in love with the numbers, not the property. And so we fell in love with the numbers first. We fell in love with the job growth. We fell in love with the diversity. And I'll point out one of those numbers too, because you talked about that population growth. It's forecasted at 4.1% over the next 5 years. But the greatest thing about that number is the biggest population that's projected to grow there is the 20 to 29-year-old age demographic.
Mm-hmm.
And when you talk about who's going to rent a property in middle Georgia that's working at a factory like Jack Links, it's a 28, 27-year-old, even younger, right? And so you see the population that's going to grow is not the 40 to 50-year-olds that are buying homes. It's that 25, 30-year-old population that's going to be the growth there. And that's a big, big deal.
Yeah.
But I just love that you've talked so far about, let's talk about the numbers around the property before we get into the actual property itself.
Well,
Yeah.
man, it's because I've been bit in the ass by doing the other side. I have scars the other way. And, some of you may have that same experience. I don't know if anybody on here, if you have some scars, you can throw it in the chat.
Yeah.
You have some scars, but I have some of those things. And I'll give you an example of why it's so important to have metrics. This is, off topic just for a second, but on topic kind of, man, because you guys brought me the deal and we run the numbers and the brokers were sourcing this deal from a broker. That's how we sourced the deal. And the brokers had their targets that they're wanting to hit, but we don't really look at what they're listing it at. We look at what makes sense to pay on this deal. And so we run the numbers, and we were pretty hard pressed on where we were, which is, where we end up at. But what's interesting is another individual who some of you may know, I won't, mention him by names, but he was also looking at this property and had kind of reached out and was like, man, there's no way I heard you guys doing, Holiday Cove. There's no way those numbers work at 12.25 or I can't remember, 12 million or whatever it was.
Yeah.
And Eric, what are we picking this property up for?
Yeah, we're at just over 10 million, 10.1. And so I'll give a little background to that, Tyler. As Tyler mentioned, we sourced it with a brokerage that we've actually worked with before. And here's the reason. I always tell people, stop investing in 20 markets, pick you two. You can't build relationships if you're looking in 20 different markets. You got to narrow it down. And people that are out there looking in 20, 30 different states, you're never building that. So we have a broker that we've worked with out there before that we bought Warner Robins off of. And what's really funny, Tyler, is ever since we've been under contract on this one, they brought us another off-market one that they want us to look at, right? Because we're building that relationship more. But yeah, they came out, they were above 11 million for the property. And that's when the gentleman you're talking about was like, you guys are crazy to look at that. But what was awesome about this deal was we were able to submit an LOI on this property before anyone else. They had a call for offer. I called up the broker, our buddy there, and just said, hey, we're serious about this property. You know how smoothly we closed the last one in Warner Robins. And if your seller wants an easy transaction, we're ready to go. And so we were able to get an LOI in ahead of the game and get it locked up before even the call for offer date, which is pretty cool, which is really cool. That's why you build relationships in these markets, man, because this will not be the last one we buy in Middle Georgia, Tyler. It just won't be, man. We're going to build us a little portfolio there.
Yeah, for sure. I love it. One more thing I want to target some of our target on like property specific. I told you that we have a very specific buy box. So we're looking for B- properties. Really, B properties are higher, in B areas or more, 75 units. This one's obviously 96 units. We want 1985 or newer. This was 1987. We want to put in no more than 3,000 to 8,000 a door. This one we're putting in 6,000 a door for some interior upgrades. And then let me just talk about return metrics, because we have had heavy equity play deals over the last few years. And man, this isn't an equity play. There's equity to it. There's equity to it, but man, we want cash flow play. And we target deals right now that have a cash flow of 6% plus. And this annualized cash flow is, almost just shy of 8% cash flow, cash on cash. And we, buy at a 6% plus cap rate. This is, we're buying at a 6.38 cap rate, which is, we're how we're buying and how we're exiting. It's a cash flow play. It's a cash flow play. How many of you on this call right now are excited for a cash flow deal to help you stabilize some things in your portfolio? If so, give me a thumbs up, or if not, give me the middle finger one. Either way, whichever
I think the other
works.
question with that, Tyler, is how many have money in an investment that's not producing a cash flow right now, right?
Oh yeah,
it's difficult.
Yeah. Listen, I have plenty. I have a lot of them like that, for sure. So yeah, it's good to. Hey, I only have a few. Oh, there we go. I see these other reactions coming.
They're coming.
I was gonna say, okay, yeah. They're slow on the draw here. I got you.
They're coming too. And then it has that IRR that we target right above 13, coming in at 13.3%. And so it definitely has. We're going to jump in here in a minute talking about the kind of financing that we're securing on this property. And it's something also that we haven't seen for a little while, Tyler, but I think people will be shocked when they see that we're going to have the first 4 years interest only. First 4 years, man, we're going to be able to cash flow this thing for sure. We're going to be able to cash flow it for sure. So
yeah, first 4 year interest only on a what year? How many year term?
It's a 7-year term. We got 4 years interest only, and we actually, for the first time in a little while, we're leveraging over 70% loan to value, which hasn't been happening a lot lately, right? And so we're actually getting a loan on it for 71%. So we're going to raise 29% for the down payment there. So it's definitely, it will be assumable agency debt when we go to sell it, which is really cool also. But yeah, it's a nice loan. We haven't seen one this clean for a little while with the way the market shifted a couple years back. So we'll get into all that. Yeah. So should we jump in a little bit about the history of the property there, Tyler? The
Sure.
age
Yeah. Yeah.
built.
What do you want to?
Yeah, man. So this was built in 1987. As many of you know, we have a goal of buying things above 1982. We want properties that are at least a B minus in a B area, which this hits. The idea is always the property should start a little worse than the neighborhood, right? So we can affect the property up to the neighborhood. I think sometimes people buy a property that's starts already better than the neighborhood and they're improving it, but the market's not coming with them. And so that's one thing we like here is that we're going to be able to bring the property up to the neighborhood as we go along with it. So it has right now roofs that have been redone on the property. So a couple of the big capital things have been done for us. There's things that we're obviously going to have put into our CapEx budget that we'll go into. They have right now 32 premium, they call them units. Their premium and what we consider premium are not the same thing. So there's definitely room
Yeah.
to renovate some of these. And then they have 64 classic units, what we consider classic units, where we're going to come in and do some renovations to the kitchens and things like that. So, and they've got, some laundry areas. I think one of the biggest things they're missing though right now, Tyler, that we're going to be able to improve on is most of the units have a washer dryer connection and they're not providing any income on those right now, or they're not earning any income on those. They're not providing washer and dryer, raising rents because of it. And so that's going to be one of our big value plays is coming in and getting those washer dryer put into these units so that we can start renting them out and making some more income on them, right?
Yeah.
So we definitely will. Yeah. But they
Another
have
thing that I loved on there was that they had 75% 2 bedroom, 2 bath. And a number of you, I don't know if any of you have been to, one of the 3-day trainings that I teach, but I think a number of you that I can recognize on here just from names for sure. But we talk about that. We love more. We want at least 50% of the units being more than two bedroom, 2 bath, because it expands your potential renting pool. And it's crazy because in a market like this, where there's literally how many units right now currently under construction in this market, Eric?
under construction, there's 24.
Yeah, that's it. That's
That's it.
literally
There's
it. And it's not
24
even
unit building.
this is not even a competitor, obviously, because it's a brand new class A building, but 24. That's it. It's
That's in
like
the whole
demand's
county.
already
That's
very,
not
very
just
high.
in
Yeah.
Forsyth, Tyler. That's in the whole county. And so there's only 370 roughly units in the whole market, that whole county right now. And that's why I say when we buy 96 of them right now, we're taking over 25% of the units in that whole market. So we're going to be able to determine a
Yeah.
lot. And I'll give you a number with that washer dryer, by the way, Tyler. We ran some numbers. As you know, on the walkthrough, we brought out a bunch of trades and contractors. They're giving us a cost right now about $1,300 to get the washer dryer connection all set up. But the going rate there in that market is $50 a unit if we do that. So when
Yeah.
you look at cost to what it's going to bring back in the NOI, it's a big, big value add for us. So the
Yeah.
seller, someone's asking on here too, Tyler. I like the question. Tell us about the seller. So we will be
Yeah.
the third owner of the building. The first owner owned it for quite a few years, and then about 4 years ago sold it to these guys. Some people don't like this, Tyler. I love it. They did what we like to do, right? This last owner came in. They've done some improvements, like they've renovated units. They've kind of renovated the clubhouse. They've put money into the roofs, and they're selling the property. So they've owned it for about 4 years. The second seller here, they're going to make their money and get out. But the great thing is they left a lot of meat on the bone for us. And so I know sometimes people get bugged by that. I think it's awesome. I like people making money. There's nothing wrong with
Yeah.
that. And
Yeah.
so we'll be the third owner on this whole property here is all that we will be since 1987 when it was built. So the original developer owned it for quite a few years. Yeah.
Yeah.
So that's why they're selling it right now.
Yeah, that's it. And they just finished with their business plan. They've executed their business plan and ready to exit. So it's phenomenal. Because the other owner, once again, he owned it for a long time. And then I saw, Manuel, you had asked if you can download, if there's a memorandum, a property packet that you can download. Yes, but we're finishing up just final things with legal to make sure that we're good to send. So we'll show you how to do a soft reserve. In fact, anybody who wants to participate and see the actual offering once it comes. And Ricky, I think that you have that link that you can throw in the. Do you have the ability to send it to? You probably actually get it. I don't know if you have the
Let's
ability
do
to
this
send it.
for
There
a
we go.
second
Okay, yeah,
too,
yeah,
Tyler, if
yeah.
you want
Sweet.
here. So anyone, I'll show this again at the end. So don't worry if you don't have your camera on your phone ready, but I'll be putting this up at the end. This is going to send you to our portal where some of you maybe already have access to it, but we will be putting this up, the offering, the full investor packet in this very soon. I did a call with the attorneys today to finalize a few things on the investor deck, right? We want to make sure everything's done the right way. And so I'll put that back up here in a little bit. So don't worry too much if you didn't get a catch on that. But Enrique can possibly share with you also. But I'll have that link back up or
I
that
shared it.
let's say at the end,
Yeah,
so that everyone.
I just sent it to everybody as well.
Yeah, so there you go. So Tyler's got it to you there too, but that'll get you on there. And like Tyler said, we never want to put something up on that's not fully ready and approved by the attorneys. And so you'll get to see a lot of information about the property, but the full investor deck we'll be having up here in the next couple of days for sure, so that everyone has access to it. Can I talk a little bit about the offering right now, Tyler? You want to wait till later?
No, yeah, you can. You totally.
I mentioned at the start of the call, what's so exciting to me about this is I'm sure a lot of you know, I go out and teach the fast tracks. And so I get to meet a lot of you guys out at a 2-day after the 3-day event. And we always talk about the Aloha Fund, and the Aloha Fund though is only for it's a 506C. So it's only for accredited investors, which is awesome to get into. We've had other offerings like that. What's very unique about this one right now, and what we haven't done for a while, is this is actually going to be under what's called a 506B. And so for the first time in a while with MF Capital, we're going to make this offering available to non-accredited investors also. But any of you that are familiar with the 506B, we can only allow so many non-accredited investors in this, the way it's set up. 35, right, Tyler? Correct me if I'm wrong. And so to me, that's really cool. We've got a lot of students that have been wanting to get into a deal. They're not accredited. They haven't had that ability to do so, and this one you will. And so that's what's going to make this one, why we want to do that soft reserve, or why you're going to want to do that soft reserve is, man, people who win act quickly. And so you can imagine how many students we've taught over the last few years, and we're going to make an offering of 506B. You got to move. And that's not me trying to push you. You got to, it is me trying to push you, but you got to move. You got to be ready to go. I don't want to say I'm not pushing you. I am, because I don't want to be out with you in 3 weeks and go, hey, Eric, I heard about that. We're looking. Nope. We're going to fill those non-accredited spots pretty quickly. And so we'll get in later, I guess, into the A1 and A2 investors, the class A1 and the difference there and what you invest
We
in.
can cover it right now, man. Like minimum investments. I saw somebody put in Lena Bell. I hope I say that correctly. The minimum investment is $50,000 for class A2. That's going to be a 6% preferred return. And then $150,000 is the minimum for class A1, and that's a 7% preferred return. So 2 different tiers there. And somebody asked me, Tamim asked what it takes to be an accredited investor. You have to make 200,000 a year if you're single, 300,000 a year if you're married, or have a net worth of $1 million, not including the value of your home. At a basic level understanding there.
Yeah. So. For us too, I mean, Tyler and I were discussing it a few weeks ago, we both have a big love for the clients that we work with, and we want everyone to be successful, and we just want everyone getting into deals so they can start seeing the process of how this works. And so we're as excited as you are that it's a 506B. We're excited that we kind of present it to more people than we usually are able to on the other deals that we've done. And so I would just say, man, don't pass up that opportunity to come in on a deal with us. One that we've already dialed in that area. We've got the same management that we should mention too, Tyler. They're already managing for us the Warner Robins deal. So we're able to piggyback off of that management company called AMC. And so they're going to take over management for us on this property here and see how we run these, right? Because you guys know our track record, you know what kind of deals MF Capital's done. And so that's why I say earlier, I'm pushing you a little bit, but you need to jump on this one pretty quick. And that's why we wanted you to have that portal tonight, so you're ready to go as soon as the offering is fully presented in the next couple of days, when we got attorney the green light from the attorneys. That's the biggest thing we're waiting on right now is before that investor
Yeah.
deck goes live.
So that's it, man. That's how that process works. So you can put in there, essentially a soft reserve, and then once it's all there, that's who we'll send it out to very first, and then we'll give you once we send this, once everything's uploaded, and we'll send it to those on the portal. We'll give you a couple days to finish everything up, if that. It shouldn't take you long to do that, and then we'll send it out to all the other 506B, potential 506B candidates within our list. And so, this replay is going to go. So this webinar, we have 80 people on here, but it'll go to a replay. Sorry, the replay will go to the others on our list. And so those of you watching the replay, same thing. You're going to be listening to this a couple days after. And then once those individuals, all y'all submit your soft reserve on there, then we'll send it out to our entire list of, potential 506B candidates. So, Patricia, I just saw on here that you asked how long the investment time is. It's 4 years interest only, but it's a 7-year hold and a 7-year term. So a longer term, a longer term loan and a longer term hold. We're always looking at these things though. Always looking at these things that make sense. But once again, this is a cash flow play deal. So if these things cash flowing, we're going to continue to let this thing cash flow, which is why we're going to Middle Georgia right now and buying this property how it is. It's like we want cash flow deals.
Exactly. So I'll give them a breakdown too. So as I mentioned, the property is being purchased for $10,100,000. We're getting debt on that property around $7,035,000. Don't hold me to pennies there or anything, but we're just getting over $7 million secured through debt, assumable Fannie debt there, which means we're going to come in and raise just under $5 million on the property. And what that $5 million is going to go to is partly obviously closing costs, down payment is going to be the biggest chunk, right? Obviously is the down payment there, the 3 million plus that we put on for the down payment. But then you've also got capital money. We're planning on this property taking right now about $580,000 in capital expenditures. That's going to be doing some interior renovations. That's going to be fixing things around the property like the fence, the parking lot. That's going to be adding washer and dryers so we can up that. That's going to be going toward things that are going to bring us some return and making the entrance look a little better. The signage is not very nice right now, as we noticed when we pulled into it. So updating signage and doing some things like that is where that money's going to go to. So the full raise go ahead, Tyler, please interrupt. Yeah.
No, go ahead. Sorry, you keep going.
Yeah,
my bad, bro.
The full raise is going to be around the $4.8 million range is what we're going to be raising on this. And that's going to be the total raise, above what we need to get the property closed, but also the capital money we want to put into this to increase the rents. And I'll tell you the greatest thing to me, we're trying to hit numbers right now that you'll see on the investor deck when it gets released. In order to hit that numbers that we're talking about, we need to average $47 increase per unit in rent. And
that's literally what I was going to interrupt you about.
Yeah, it's crazy. We'll see comps. You're going to see right now, the 1-bedrooms that have been renovated already are already beating that $47 more per unit. They're more like 75. And then the 2-bedrooms are getting about $75 also to 85 if they've been renovated today, let alone what growth they'll see. And so we're going to easily hit that 47. We should be able to hit that $47 pretty easy to hit the numbers we want.
That's it, which is one of the ways, man, that once again, I mentioned scars, learning lessons, and you're not in the business this long without having those. But I'll tell you that, one of the things that we look at, well, as they're bringing me underwriting, we're back and forth. Not big rent gains, man. I don't want to see that play. I want to see what we are on like conservative numbers, super conservative numbers. I want good leverage, but not too much leverage. I want good debt, long-term debt, because, man, also, man, when you get caught into something where your debt piece is telling you that you have to exit, that is where people get into trouble. And so bigger, longer terms to help you cash flow and then be able to maximize an exit when you want to exit is also critical. And so you look at that, at the $47, right, is what we have to hit.
Yeah. So
Right.
go ahead, and then I'll give them an idea of the numbers on that.
Well, I think it's like 165 or something, isn't it?
Yeah. So
Like
right
that
now,
we're
someone
below.
asked for the breakdown too, so I can give it with this. Right now, there's 24 one bedrooms and there's 72 two bedrooms. The one bedrooms that have been renovated are achieving 1,035 rent, and the ones that are not are averaging 957. So you've got quite a bit of range there. And then the one bedroom, or sorry, the two bedrooms that have been renovated, they're getting up to 1135. And so, yeah, and that's a low rent for the area of renovated units. So we're going to be able to just naturally take the rents up, let alone the ones that we also renovate in this market. So based on the comps that we have in that market. Yeah.
Yeah.
Some of the interior things we're looking at doing, like we mentioned, adding the washer dryer, rentals in the units right now, repairing some of the replacing, I should say, some of the water heaters, new appliances and the ones we term premium, renovating some of the bathrooms and kitchens in select units. So we'll have a breakdown of that on the business plan on the investor deck there. Exterior wise, we're going to look at doing some landscaping. It could use a little facelift, some concrete that needs to be repaired. Update the exterior signage will be some of the things we look at. Some new AC units are needed, and some minor repairs to the asphalt is also another one. So we've got, like I said, we're budgeting out about 580,000 right now in capex, and that capex will be broken down on the investor deck. I've got it broken down where all that money is going to go into that deal there. So, yeah,
One thing that might sound super basic, but I'm just telling, but it won't be for any of you who have ever owned apartments or know much about the leasing opportunity of apartments. But when you walk into the leasing office is kind of like it's like there's an office off to the right. You have like this narrow, weird little room right as you walk in that has like this awkwardly placed desk, and then it opens up into like a clubhouse type feel. But man, that if you can dial in the energy within your leasing office, you will absolutely sign more leases and leases for higher rents. And so one of the first things we'll do as well is then rehab the leasing office. And it is because all you got to do is blow out a couple walls, rearrange some things, and it could be beautiful. And
huge.
it's huge. You got a nice pool behind. So yeah.
Yeah, so I tell you too, one of the big things I was thinking about as we're going through this, man, is are we going to put in any money right now, or the other GPs bringing in money
Yeah.
also?
Yeah.
That's where I mentioned this raise of 4.8 million, right, that we need to get to. Some of that has already been raised just through the GP side, and so
Over
um,
10% at least. Yeah.
yeah,
Yeah.
Grace and Hannah. So you've got Grace and Hannah, the ladies I mentioned from Orlando. Grace has 20 years in real estate as a
So sharp.
broker.
I just
Yeah,
listen,
super sharp.
I'll just tell you, I walked the units, the number of the units with, I mean, so sharp, so sharp. I was very impressed.
Yeah.
So,
And
sorry,
so
keep
Hannah
interrupting you,
has
but
Hannah has
yeah,
like obviously property management experience also. They own the best thing they own, Tyler. You haven't gone yet. They own a dessert shop here in Orlando, man. That's where we
I've
need to go.
heard about it,
We should have
bro.
held it there, the meeting. But so they've already put in as of today, and they're raising more, but they're already at 300,000 in the deal. So
Yeah,
there's when I say 4.8 and why I was pushing a little bit earlier is a lot of that has already been spoken for. Even we already have that kind of into the deal. And so that's why I was saying we will hit that number pretty quickly. And so be ready to go as soon as that investor deck's on there, right? As we're getting started on this deal. So yeah, but the comps are definitely going to allow us to jump pretty high on these rents here. That's for sure.
yeah.
What else we want to mention here tonight, Tyler? I know we can discuss maybe a little bit of the underwriting, how we got to
I
it.
mean, yeah, I mean, yeah, totally. We have at a high level, but man, today the main thing for today was to let you know that we have listen. Last year, 2023 was our lowest transaction year that we've had. Well, man, that I've had since I first started. But that's for a reason. Things just weren't penciling out. And so when I say that, huge shout out to Eric and Lindsay and for their patience. Listen, it's frustrating to continue to bring deals that people continue to shut down. But man, like I'm very grateful that they understand why and they should go in and push it and bring in the good shit like this one. So I'm very, very excited. I was so pumped. it's almost like, it's funny because I was so pumped when I saw the metrics, the numbers, and then I was also even more pumped when I actually showed up to the property. I took my son Paxton to the property, and I was so pumped to get there and realize, like, well, man, it's good there too. Not just on the numbers, but on the the visuals and everything there and the potential. So today was just a more of an introductory one to let you know that it's there. Let you put in your soft commits, and then we'll do another webinar to go through the whole investor deck with you, so you can visually see all those kind of things as well. So, but yeah, I mean, underwriting process. Go ahead.
Let me just mention two other things, and then we can even do the deeper one on as the deck's ready. But one was, I hope they know when we went to the property, we don't just go there and act like we know everything about roofs and foundations and everything like that. And so we had a lot of trades there that day when we were walking the property. We set up a lot of trades. We actually scoped the sewers. We brought in people to look at different electrical and plumbing and stuff like that. And it's really received a clean bill of health. It's received a really clean bill of health, the property. Obviously, it was built in 87. There's some windows that have failed that, have moisture in between them and a couple items like that. But for the most part, it got a really, really clean bill of health that you'll notice and we'll be able to promote to you also. And before I forget, Tyler, I did want to mention one thing. I don't even know if I told you this yet, but Hannah and Grace do own that place. It's called Meat Fresh, Fresh Meat Fresh Orlando, excuse me. And we're going to do a thing there Wednesday at 5 o'clock. If you're in Orlando, not everyone here is in Orlando, but if you're in that area, look up Meat Fresh Orlando, and we're going to meet there Wednesday at 5 o'clock for a couple hours and get us a little bit of shaved ice. And they call it, don't let me mess it up, Grace, but boba tea, right?
Boba tea.
It's off of Colonial Drive. You'll know you've got it if you're looking at I think it's 5144 Colonial Drive in Orlando. So if you're in the Orlando area, come join us Wednesday at 5 o'clock. We're gonna have a little networking about the property too. So
I just sent it to everybody. I just sent the address to everybody.
Yeah. And so come get some yummy food there too. It's an awesome place. So we're excited about it. But yeah, that will do for me, man. That's what I wanted to get across. So
Eric, how come you got more excited about the shave ice and boba tea than the deal, bro? I saw that. I saw the energy.
I'll tell you, anyone that comes into the investment, right, they get free shaved ice. They get free shaved ice. Is that an incentive, man? My kids would do it. My kids love shaved ice. So, yeah. We're excited. I hope you guys saw the excitement Tyler and I have about this property. Being over acquisitions for MF Capital for the last little bit, it's fun to bring properties to the fund, but this is going to be able to go out to so many different people. It really excites me, and I'm really pumped to work with some of you on these deals that we're bringing now in Middle Georgia. Like I say, we don't know which one it is exactly yet, but it will not be the last property we buy there either. We're going into this to build a portfolio, and as we get more and more properties in that area, it's just going to benefit each of the other deals, right? And so we're pretty pumped about this one right now, man.
That's it. Me too. Very, very excited about it. So we'll put this link one more time for y'all to be able to submit your, just put it in the chat, and then Eric, or you can, scan the QR code there. But excited for what is to come, man. We're already seeing, like, we're in just a unique stage of the market, a unique stage of the market where, well, I'll tell you where my best deals have been done, which is pretty much anybody's best deals, is what I'll tell you, is when you're buying at cap rates that are a little bit higher, and then you're buying in an environment where sellers are a little bit more motivated, and then you can swoop in and buy these properties. And then when cap rates compress and interest rates compress, well, man, exit values, well, they go high. But here's the thing with this. You go look at our underwriting. We'll share the underwriting with y'all once, in the pitch deck. We didn't account for interest rates going down and cap rates going down and equity going up. We didn't even account for that. We were very, very, very ultra conservative with every number, man. I would challenge you to go nitpick the shit out of any number that we put on there, because we were very, very, very conservative. And we're very, very conservative because we're risk averse right now. We want to make sure once it's a cash flow deal and a risk adjusted deal. So I'll challenge you to go comb through those numbers. When you see the underwriting, you'll see that this is a beautiful deal, very well positioned deal. And so once again, huge shout out to Eric and to Lindsay for sourcing this thing, continuing to harness the relationship with the brokers. That is the only way that we won this deal the way that we did. So
Yep.
appreciate y'all, man. Thank you so much for being on here. We will, once again, be sending everything out shortly once everything's on that portal. So make sure that you reserve your spot so that you get first crack at that. Anything else, Eric, on your end?
That's it, man. I did see one last question just about how do they help bring investors into the deal. And so I would say go to that link and then you're going to hear from my guy, Enrique. Enrique can go over all that stuff with you. And so make sure you do that. Sheldon put up there, you know, what's protocol for bringing in investors. So yeah, obviously present it out and we can do that. But hey, it was great being able to speak with you guys again. We're just going to keep on holding these as we bring in more properties too. So make sure though you jump on this one. We will not be offering a lot of them like this 506B. So make sure you're jumping on these properties, guys. Thanks, Tyler, for joining, man.
Hey, absolutely, man. Thank you. Thanks, y'all. Appreciate you. Have a great night.
See you guys.